Good afternoon, everyone, and welcome to this episode where we're going to be tackling trading psychology. My name is Sihle Tuta, and I'm here with my colleague Terence Hove, who's a senior market analyst over at Exness, as he would say. Terence, how are you doing?
I'm very well, thanks, Sihle. How are you?
I'm good. So, out of all the requirements or the things that you need to succeed as a trader, all the boxes you need to tick. I mean, we've tackled, I think, most of them in our previous episodes. But there's one which keeps on revealing its head, which is trading psychology, which is being dubbed as the key element or is the key ingredient in your success as a trader. What are we talking about exactly when we're talking about trading psychology? What is it exactly, and why is it important? Why is it a very important ingredient in the whole success of a trader?
Yeah, so psychology has to do with the mind, with your mindset, with your thought patterns, and how you respond to your environment, to situations, So, for simplicity's sake, we'll say your mindset, right? So this is your mindset in various circumstances. And right now, when we're talking about trading psychology, we're talking about the specific mindset around your trading business, your trading journey, your trading activities, and what goes on in terms of being clear and successful. I always like giving the analogy of, football, and if you look at some of the most successful teams, you'll find that there was a season or seasons where there was a certain kind of mindset within the camp, and that elevated the skill within that camp to win a championship. I mean, we've seen this in various stories, in great, sport movies where the underdogs, the never would be's, ended up becoming the champions because one of the things that they were able to harness was the mindset to get you to the place. So it is a very key ingredient, in your trading journey, because as a trader, your trading conditions are shaped with your mindset, from the decisions you make. And this eventually results in your ability to make a trade, to buy or to sell.
Okay.
Right. So that's what I would say, a description, of a trader's mindset or psychology in trading is.
So then how do we tell good psychology
Right.
from bad psychology from each other?
From each other.
How do we identify or how do we differentiate a trader who has good psychology and one who has bad psychology?
All right. So very interesting topic. And essentially, because we are trading, trading is about profit and loss. Ultimately, it's meant to be a successful endeavor for you as a trader, which is your profit. That's why you do it. I mean, that's why you trade. So being earnest about that type of business. So that becomes the measure of success as a trader. And what I mean by that is to differentiate good psychology from bad psychology. You can have good trading activity and make profit. But if your profit is not realized, you are now tipping over into the bad psychology space where, you've grown your account remarkably, from $1,000, you've grown it to, $26,000. That's quite good, right? And then now where you are supposed to implement the right risk parameters to protect your capital, to take profit levels, and all of the stuff that goes with closing a trade successfully, then your psychology starts failing you in terms of making the right decisions.
Okay.
You've been on this journey trading one lot size, analyzing the risk, entering right. You get to 26, 27, now you start opening 10 lots. And so there's something in your psychology that is now triggering, that trading pattern that was not otherwise successful. And
Okay.
then it leads to your demise,
Yeah. So what is the connection between traders who would, when they see that their trade is going into the negative,
Mhm.
they quickly close it? Oh, sorry.
Yes.
What I mean is when they see that their trade
Yeah.
is going into profit,
Yes.
as soon as it goes into profit,
Yeah.
they want to
Yeah.
take the profit.
Yeah.
But when they see that they're losing, they want to hold on to the loss
Yes.
and hope that it's gonna
Yes.
turn.
Yeah.
Right. So they let their losses run
Yeah.
and cut their profits short.
Yes.
As opposed to, I would think, is to cut their losses short
Mhm.
and let
Your profits run.
the winning trades
Yeah.
run. What is the connection between that
Mhm.
type of behavior and psychology?
Yeah.
Where does psychology, what role does psychology play in that type of behavior that we see
Yeah.
with most traders?
So the psychology here comes to your decision-making pattern.
Mm.
First of all, understanding what it is you are managing, what risk you are managing. Because when you understand that, your psychology will tell you that uh, don't cut your profits too soon. And that has a lot to do with, perhaps your makeup in terms of you are more risk averse or you are afraid of being successful. So there's a negative aspect that you are attaching those profits to let them run. Perhaps you are so fearful that the little that you have made, you're going to lose it. So it's fear of loss, right? And when you're letting your losses run, it's fear of being wrong, that you got it wrong somewhere, So you are hoping that, it's going to turn around at some point, maybe you just want to be right.
Okay. So then how does one go about to acquire good trading psychology? How do you train yourself or train your mind to be on the right side of psychology as a trader if there is something like that?
I think
or is it even possible?
It is possible. I mean, that's why we've got some of the most successful traders that otherwise should not have been traders at all, but they've gone on to become successful traders. So they learned the art of trading and the science that is there as well. And the science, it's around the risk management that you need to adhere to, which you've mentioned before in terms of your risk reward ratio, understanding what that means. And the second part, it's the art, which comes down to the state of mind that you are in when you're making these decisions. So when you invest, one of the great sportsmen who's lived is was the late Kobe Bryant. And he spoke about his mindset and how he would outwork his other colleagues in as much as he was gifted, but he took, he put in the hard work. So the hard work here is investing in that literature that forms and shapes your thoughts into being as successfully, psychologically incited a trader, if we can call it that. That way you are insightful of your pitfalls, because that's where the psychology helps when it's in the right way. If you do this, that it's going to lead to your demise. So you avoid, those type of trading decisions that are not good for you. So you become self-aware. So it becomes a self-development journey that, the literature is there, the support is there, and you just need to get into the right kind of philosophy, when it comes to trading psychology.
Which was going to be my next question, the whole thing about self-awareness, because I'm not sure if your trading psychology needs some work. Is it something you know?
Yes.
Right?
Yeah.
Is it something you always know, or do you need a third party or someone else who's not emotionally involved situation to point it out to you that, look, man, you have a good strategy. You're very good at identifying key setups,
Yeah.
but you need to work on your psychology.
Mhm.
Is it something you are always going to identify yourself,
Mhm.
or do you need to open up yourself to someone to criticize you and say, look, man,
Yeah.
this is what you need to work on.
Yeah.
This is what you need to minimize. This is what you need to do more of.
Yeah. So I think with that one, it's both yes,
Mm.
on both sides. You can be self-aware and guide yourself through it.
Yeah.
There are traders who have that capability, and some of them have gone on to develop tools
Mm.
to help other traders identify
Mm.
these pitfalls and so forth. But it always helps as well when you've got someone but it needs to be someone who understands and who's well vested within the industry. They know what they're talking about. They know and can identify those pitfalls, because what they can help you do is to shorten that learning curve, where they're able to, give you shortcuts, so to speak, to a better solution, and you can personalize it to
Mm.
yourself. But at least you won't have to take a lot of time, looking for the solution. You are told, look, this is the solution, rather go there. And when you find it there, you personalize it. So it shortens your
Yeah.
learning curve. So it does help. Even if you are personally self-aware and you can get yourself out of that, it does definitely help to have someone who can point out a thing or two.
Yeah. I'm thinking because trading can be a very lonely journey,
Yes.
right?
Yeah.
It can lead you into isolation.
Yes.
Like a lot of traders just trade in isolation, maybe because they prefer it like that, or because that's just how the job of a trader is. It's just you and your charts, right? So if you are not somebody who's able to self-critique,
Mhm.
right, and you are in that space where you are alone, I'm thinking how long it can take for you to see some progress.
Yeah. Yeah.
And especially because when it comes to our trading
Yes.
and our trading results, most traders are very secretive
Yeah.
of
That's it.
of what they accomplish
Mhm.
month to month, right? On social media, everybody's screen is blue,
Mhm.
blue screen all the way, right? Everybody's making money, but in reality, it's not the situation because of pride, because the image some people or some traders may project on social media
Mhm.
may not be the actual case.
Yeah.
So you may find that someone like that may take longer to realize
Mm.
or to see progress because there is no honest feedback
Mm.
they're getting from anyone,
Right.
right? Especially if you're not somebody who's self-aware,
Mm.
right? Your results, your trading results are poor, but at the same time, you're not self-aware. You don't realize that you need some
Mm.
psychological intervention. I know how that sounds a bit
Yeah.
off, psychological intervention, but you need some intervention,
Mhm.
from a psychology point of view as a trader. So if you're not that person who's able to do that for yourself,
Mhm.
and you're not opening up yourself to somebody else to critique you,
Mhm.
geez, man,
Yeah.
that can be
You
disastrous.
you're in for it, right?
Yeah,
You
and for a long time.
Yeah, yeah. And I think that's one of the things where you need to be careful on the source of information.
Mm.
Even if you trade, if you join trading communities, you need to be very careful as well, the influences that come from that, because like you say, there's all sorts of characters out there and there's all sorts of groups that are out there. But at the end of the day, you need to be wise in choosing the right one, because yeah, like you said, it can be very lonesome.
Mm.
And it makes your trading journey even the more difficult. But the good thing about being with a broker, with a multi-asset broker like Exness, is that you are able to find these, platforms, in a more secure way, through some of the products that we offer, where you are just able to become more insightful about what's going on, in terms of, if you look at how some of our brokers, they create academies where they're able to
Yeah.
guide and coach traders in terms of where they might be having pitfalls. And that's a very good support system.
Yeah.
Like you said, we've got our brokers in virtually different countries,
Yeah.
and that becomes also part of creating that community as well,
Yeah.
that Exness offers as a broker. And in a very legitimate way as well,
So a trader who doesn't have their psychology in check,
Mhm.
how does it usually show itself? Is it I mean, is it is it a trader who becomes scared? Does it show itself fear? Is it greed?
Yeah.
How do you identify a trader who doesn't have their psychology in check? What are the signs?
Yeah. I think ultimately it comes down to the trading results.
Yeah.
That's the most scientific way we
Yeah.
could measure that. If um, the guy is a day trader, he trades very well during the day. When it comes to closing the trade, they fumble, or they've scalped very well, they're in the profit, but they let it drop. So that trading result always shows, and ultimately the purpose, what you are trading for, you are failing to constantly achieve. That becomes a red flag with regards to trading psychology, and that has a high correlation with risk management as well. So you find the two go hand in hand. Yeah.
Interesting.
Yeah.
Interesting.
Yeah.
Because trading psychology is one of those things that most of traders tend to overlook.
Yeah.
Right? Many traders will focus on obviously acquiring the capital to trade.
Yeah.
They'll focus on the
The
strategy,
strategies, yes.
and the indicators, and the technical analysis and the fundamental analysis, having the right tools, but rarely the psychology. And I think a lot of traders are yet to admit that psychology is a key component
Mhm.
in trading success.
Yeah.
I mean, some courses don't even teach psychology.
Mhm.
They teach you enter here, exit here,
Yeah.
stop loss here, MT4, broker, margin leverage,
Mhm.
and they leave it at that.
Yeah.
And they don't touch on the psychology, which is why I think even some trading commentators argue that psychology is actually the most important component
Mhm.
of your trading strategy,
Yeah.
or of your success as a trader.
Yeah.
Yeah, man. So, I mean, in parting, what would you say to our viewers at home on the subject of trading psychology?
Yeah. Well, like I mentioned, your trading psychology has a high correlation with your risk management and vice versa.
Yeah.
And these are the two pillars of a successful trading journey that when you master them, your trading experience, amplifies, it multiplies. And the beautiful thing about this type of or part of financial markets is the results show. So invest in that, your trading psychology, in your risk management. They go hand in hand, and you will see how nourished your trading activities will become, and how simpler it is to run away from the losses, if I can call it that.
So, one final question,
Yeah.
which is just coming to my mind as you say that, the psychology of taking losses,
Mhm.
because I can take 20 trades in a month,
Yeah.
and maybe let's say my target is to win 9 trades,
Mhm.
or to win whatever the number is, right? Or 50-50, 50 wins, 50 losses.
Mhm.
But I don't know what the distribution of this trade is going to look like.
Mhm.
I could have first 3 winning, a loss, 3 wins, 5 losses.
Mhm.
The distribution can come in any format.
Yeah.
Or I can take 9 losing trades in a row,
Yeah.
one after the other, and then the rest maybe
Comes in. Yes.
become winners. So how would you suggest I handle consecutive losses? Because that is the one thing
Yeah.
that really crushes a lot of traders.
A lot of traders. Yeah.
Because losses are part of the business.
Yeah.
You are going to have losses,
Yeah.
no matter how good of a trader you are. So what is the role of psychology
In that.
in your losing streak as a trader?
So a losing streak, this is the part now where the psychology correlates highly with the risk management. Because in a losing streak, ultimately your risk management is a fundamental part of your trading strategy.
Yeah.
So if you're in a losing streak, it means you also don't have a structure around your trading for you to know that, look, there's somewhere where you're getting it wrong.
Yeah.
So if there's somewhere where you're getting it wrong, that means that there is an element in your psychology that's making you persistent in the way you're viewing the market. For example, a lot of traders have been caught on the wrong side of the market because they kept selling when the market is going up. Why? Because they're trying to preempt the market to say the turn is going to come now. The market will turn when it turns. The psychology to accept that the market will turn when it will turn, will tell you that view the market with what's going on.
Yeah.
Right now, it's an up. The opportunities to sell, that comes down again to your risk management. If you're in a sell position, you know it's very short term. You can't have it long term. And when the market turns, you know that the risk is now in your favor in terms of going on that side of the market, right? So that is where I think the psychology come, that if it's consistent, there's some decision you are consistently making wrong, you need to take a step back, look at the bigger picture on why you're keeping making that wrong decision. And like you said, losses are part of the game. When you see that, it's just a signal, an indicator to say there's something that you got wrong. Get out of it, re-look at it, and getting into the right way.
Interesting. Anyway, thank you for your insights, Terence. And to all our viewers at home, thank you for watching this episode. Please like and subscribe to the channel. And please follow us on social media, XNES Africa on TikTok, XNES Africa on Instagram, also on Twitter. And for more information about the trading services that are available to you as a trader on the XNES platform, you can visit www.xnes.com for more information. Thank you once again. Until next time, it's bye for now.
Bye for now.